we will continue our Wyckoff methodology workshops with a tape reading special, part 1 with Roman Bogomazov. Hi, I'm Bruce Fraser, and this will be the first part of a 2-part special on tape reading. Had a huge response to the last tape reading workshop that we did with Roman. Very popular, and so we are going to just continue on with this great theme. Roman, welcome.
Thank you, Bruce. As always, happy to be here.
Now, you're working on a series on tape reading, and you're in the middle of it right now. Tell us more about it.
Well, I'm really excited because we just finished series number 1, and that was just the foundational principles on tape reading. We had such a great feedback. People really like it because, I mean, this is just the core of chart reading for me and for you, Bruce. I know you know that you also pay a lot of attention to tape reading. The basics were covered, and we are looking forward now to the sessions with David Wise and William Reardon. And you guys, for those of you who are interested in this skill, I would definitely recommend signing up. We're just starting with the basics and going to more advanced concepts. So even though the series number 1 is done, you could always just buy it on demand and then join us for live sessions.
This is a very sort of a rare teaching in that there are only a few people that actually do this classic Wyckoff tape reading, which really is a bar chart oriented process.
Right. And it's been really hard for me because I've been on the lookout, obviously for any talent around the world, not just here in the US, but around the world as to, who are the best tape readers right now. And it's a dying craft, as I understood, because people who mostly used it were people, during Wyckoff era, at the beginning of last century. And then, through the 30s, 40s, 50s, 60s, people still used a lot of the tape reading techniques that became more of chart reading. And now we mostly, use indicators and everything else. So it's really hard to find somebody who possesses, a true skill, true deep skill on how to do that. So those people are very valuable.
Well, let's get started because you're somebody with those deep skills, and we have a case study that we're springing on you, and you don't know really anything about what comes next, so to speak. And so with that, I'm going to pause the recording, and we're going to move it over to your screen. So just hold on just a sec. All right, so we have a chart here of Micron technology, and the period goes back from 2008 to 2011. Roman, take it away.
All right, great. Well, the first thing that we're gonna do, guys, is still, think about the price structure. We want to understand what the bias is right now, what kind of environment we are in, and then go to tape reading where, as Bruce said, we're doing our bar by bar analysis, and then we're doing swing by swing analysis. And from there, we are going into tactics and we are putting on some of the positions. Now, sometimes you're going to be puzzled as to what's going on, even, applying all of these techniques. So tactics, tactical work and tactical decision making is actually, quite helpful, even if we don't know the exact bias. We could rely on the structure itself and figure out, what's going to happen. So what do we see here in the structure? Well, an obvious trading range that was preceded by an uptrend of the 2008 low. So we know that in 2008, the market was in the cyclical secular decline into the lows, and then there were a lot of buying on the way up. We see that the this specific stock is obviously a leadership stock as the price rises, and then we're assuming that after the uptrend, our first assumption on the bias is going to be that it's bullish, and we need either to confirm it or for this bias to fail. So we're looking for the evidence of one over another. Now that we kind of have this roadmap, now let's look into the trading range. So a stop in action, probably somewhere here is the climactic action. This looks a little bit climactic as the run, increasing the volume signature. So we know that from here, we're gonna go probably into a trading range. A more defined change of character here, I would say. I would even label this as a kind of like a shakeout, selling climax, automatic reaction, secondary test, phase A. And we're assuming again that if this is a bullish bias, then we are in the reaccumulation type of mode. Again, to be confirmed or to fail. As we are having this area right here, this becomes a little bit interesting and problematic because we are actually making a low, which we could label as a minus sign of weakness, whether this is, a distribution or an accumulation. So this is still showing some kind of weakness. Now, out of that weakness, after the some of the selling that we're seeing in this area, we are assuming that there is some kind of exhaustion between demand and supply, and the price goes up. Now, please note how it goes up. We are hitting the resistance, but we're not really overcoming it. And then we are going into another trading range. So here's the big question here. Are we in the sign of strength type of action, or are we in the upthrust type of action? And by not committing fully, I would be thinking that maybe we're in some kind of upthrust action, unless we're consolidating here and then resuming the course. So if failure below this lows, below around 9.5, will be substantial, and that would probably put us on the map to go back into the support area. But if we stay here and have ability to consolidate or maybe even break out, then we're going to have a more bullish scenario.
So let me
So
ask
with
you a question of distinction between a sign of strength and an upthrust, because you're suggesting or saying outright that the sign of strength really didn't present itself and that it had more of an upthrust type action. How would you make that distinction?
So the definition of a sign of strength is that the price has to commit above the cluster that was created, a resistance cluster that was created in phases A and B, and have the ability to stay above it. And then if it reacts back to the support area and not back into the trading range. An upthrust is a temporary commitment, and we kind of see how temporary this commitment was. There were probably like a couple of sessions, maybe like one. We're going to zoom in and we're going to look at this. And then there is a test, or actually multiple tests, and every time the price comes back. So that looks a little bit more upthrusty than a sign of strength. But again, we have to see what's going to happen next. So let's just increase the size here. Okay, and now we see the whole structure, so we could go a little bit more into the details of what's going on here. This resistance is extremely important, and we see how many progressive closes up we have here as the commitment. This looks like a test. And again, we could be in this trading range here. But specifically, what is going on here? So this lower low is a little bit of a suspect after the selling, exhaustion of selling, and then we see some kind of absorption of supply in this area that pushes the price up. And again, we're thinking about the result. What do we want to see? We want to see, further commitment up. Actually, demand on the way up was, somewhat healthy, especially in this area. And I wonder if, we just go and kind of like retest this area right here. And then specifically, once we understand the structure and what's going on, go into the latest price action. So here's a trading range on its own. And we are seeing how demand is starting to diminish. First, from this bar going forward, look at the demand signature. What do you see? So obviously that diminished demand And we are kind of traveling on the momentum that was created off this low. So we know that the price should come back somewhere into this area where they were buying before, and we're, somewhat there. So what happens when we do so? Supply, there is an increase of supply. This is a hidden supply on the attempt to overcome the high. So we're thinking that, they sold here, now they're selling here. And then supply actually goes down. So we just have to see how that's going to unfold. At some point, I mean, like, you don't have to know everything about every single bar. You just kind of like go with the flow and just see what's going to happen. And then once you have a clear indication, then, proceed with any of your trades. So we're going to go bar by bar. So this is a good bar, reacting well to the upside. The volume is increasing, so we're thinking that this is an ability of the price to stay at this resistance level, and that would either prolong the trading range or actually have a breakout. So we'll just have to see. Closer to the resistance, supply is coming in, and we're seeing that now, closer to this level right here, the price stops and the volume signature expands. So this would suggest that not just demand expanding, but supply is expanding as well. So maybe like some stop in action, maybe reaction. So let's just see what happens next. Okay, so here's this reaction. So reaction is not that deep, so that's okay. Some testing action of that particular bar. And we're actually doing really well on the test here. So let's just see if we could break the resistance and see how just, you don't have to really guess what's going to happen. One of the things that, we tell our students is follow the market. The market is going to show you exactly what, it wants to do. Okay, so failure again around the resistance. So therefore, not the best demand that we have seen. And as we said, there was some supply built in. And your most difficult portions of tape trading is going to be around the trading range because of this whole volatility up and down, up and down. So again, don't try to guess, just try to figure out how the market is moving and find the place where the market is ready to move out of the trading range. So this is an interesting bar right here, some increase of the supply, but look at how it stops at the previous point of the support. Multiple times it stopped here. And then it has a little bit of the demand tail, so suggesting that demand is coming in. So let's just see if the price could hold here. And that's basically what we're doing, action test, action test. Previous bar was an action, so now the current bar is the test. I'm going to increase a little bit the size here so that we would see the bars a little bit better. Okay. No continuation to the upside, reversal, and still the volume signature is somewhat, high here. So let's just see if we could go below 1025. Still some rejection of that level, so demand is still present. Okay, but again, no follow through. And it feels like, every time now lately the demand is trying to come in, there is just right away almost instantly, move down. So we'll have to kind of be on the lookout for that. Some supply is coming in on that bar, but the close is favorable. It's in the middle of the cluster of all of those bars. So maybe some local absorption is going on. But look at how, it just moves down again. So that just shows much more selling, that whatever demand is coming in at that level, 1025, it just can't overcome specific levels. And it feels like, that idea about the upthrust, could be still unfolding. Again, I don't see any edge specifically here. For me personally, I would probably prefer to see some kind of more permanent move down and then attempt to go up, something like this, and then going down. So if we're looking for the bearish scenario. So just staying put, nothing really is happening for me. Okay, no follow through to the downside. Here it is. Okay, and definitely this becomes the swing where not only do we see the increase of the supply, we also see how the price starts to move down. Now, what's interesting here is that the texture starts to change, right? So what is the texture? It's kind of like the volatility um, behavior. We're seeing that from here to here, then to the last swing down, this spread to the downside is not that aggressive, so we just want to note that. Okay. Good 2 bars to the upside, but we really, the key right now for us is this bar. Can we overcome this bar as we come back to the trading range? Could we come back maybe above this level, commit above, and then have some kind of retest and go up? So let's see if that is possible. And it's not. So here is your answer right here. And I probably would be thinking here that if we're gonna start moving down, I probably would have my first pro position, which is short, just breaking through this level with kind of like trying to rally to this automatic reaction high, and with the stop loss somewhere here. So this becomes a little bit more actionable at this point. Our targets to the downside, if we're triggered, would be somewhere here around this area. So let's just see if that might happen. On the other side, this is the key level right now, and we are not closing below that. And we're not closing below that on diminishing supply signatures. So again, if we are gonna uh, overcome this, this could become on the background of this structure a little bit more bullish. So let's just see what happens. Okay, so we're in a trade. Here's our first position. We know where the stop loss is at around 1050, slightly higher. Okay, so normal bearish action. Again, we do have those type of targets, down there. Let me just maybe increase again a little bit the size of our chart here. So I would be thinking that this is our first target, target number 1, and then target number 2, target number 3. We would be thinking, how quickly the price could move there, and it seems that it's probably could move there somewhat quick, just on the way of how uh, supply is coming in, and now the price moves with ease. Um,
And
yeah,
now,
no.
just as a
Mhm.
footnote, this area that you just analyzed has distributional qualities to it and would be a candidate for a complete point figure count.
Yeah, that's a good point, Bruce. So we would probably take it like this, right?
At least, yeah. And then, right.
This, and then I don't know, probably like this.
Yes.
Hmm. So
And
and
also it just
mhm,
has a complete sort of a distributional structure to it, which is
mhm.
for further confirmation of your trade.
Well, now we're seeing it, and I mean, it's obviously uh, easier to see it in hindsight, right, guys? But we're doing this almost like as a real time, like as the price unfolds. So
Well, and
as you,
you're having immediate results from your trade, which is
Mhm.
really, I think, the key to good trading is that you're, and this is totally why Coffeean is that you put your trade on at the place where you can have maximum opportunity at immediately. And
Yeah, so
you've created that in that trade.
timing is obviously, would be the key here. So let's just continue with this. And what we're looking for right now, because the price is just running away from us and doesn't even allow us to open maybe like a second unit or so. Um, and our entry could have been a little bit earlier, maybe like after this failure right here, now that I'm looking at this. But, we're entering after the last point of supply was the confirmation of the breakout, so the most conservative entry. But what we're looking for right now is some kind of climactic action, some kind of stopping action, something akin to what we have had maybe in this area, where supply is increasing and uh, volumes, the price spread is also increasing, or something like this, where there are multiple bars and then the supply is increasing as well. Maybe an up bar like this. Um,
And by
and
the way, that's all happening in the same price zone that the trade is in right now.
Yeah. Okay, so some demand is there behind, a couple of those bars into the downside. Why? Because the volume signature emerges, and then we don't have any progression to the downside. And that's, our target number one. If we would have multiple units, I would be thinking here that we would probably scale out at this point, at least one unit, just to be on the safe side and to make sure that our trade uh, is already profitable. But we only have one unit, so we'll try to kind of figure out how to catch a bottom. Here's another bar where we would be a little bit concerned, in terms of our target, initial target. Again, my preference is always to have multiple units because you can scale out easily and scale in easily. Um, Even though the momentum has increased relative to this swing, we still don't have anything uh, of this nature where there is a lot of volatility to the downside, where there is just some kind of stupid moves to the downside in 1 or 2 days, and that usually would be climactic. But this type of tentative movement to the downside, it's still bearish, but it definitely doesn't have that big volatility and momentum to the downside. Um, okay, attempt to go up. So demand is present, but it's not that great yet. This is probably the first indication right here in the last 2 or 3 bars where we see in tail, attempt to go up, supply is coming in, and then on the last bar, that supply is actually doesn't have any follow through. So again, this probably in this area right here would be our target number one, and you could scale in unit number one if you scaled in, correctly. Okay, I like this bar a lot. So this is more of a change of behavior type of bar that might tell you that, okay, well maybe we're done with this move and we just in this larger formation here. Which is on the top of the uptrend. So, and it stops at the logical place where before the price has stopped. So we might as well, think what kind of potential rally we could have here. So, and we want to make sure that we understand the trend. So something like this. Could we go here to about 9,875, come back for some kind of retest? Is it going to be still a structure within the downtrend or not? Okay, so this bar, this is what we were looking for. Um, Demand has occurred, but, obviously, and this looks more like earnings maybe. Um, this is becoming a little bit more reminiscent of what we had before. Increase of volatility, increase of the volume signature. Please note that this is the highest volume signature on this chart. So again, if we said that this would be unit number one scale out, then this could be unit number two scale out. Again, I don't have multiple units here, but I would be thinking of, if I have one unit, I would be thinking about moving the stop loss. You could move the stop loss above the high of the bar. You could move the stop loss slightly above 1/2 of the spread. So both places are okay. They're aggressive enough on this type of action, to act like this. And even if you exit at the close and the price still goes down, you still should be feeling really good about the trade. You're taking, what is it, about maybe $2 on the $9 stock. So you're close to maybe like 25% or so. All right, well, let's just see what happens next. Stop in action. And again, I would be thinking about moving the stop loss, maybe slightly above 750 here. Okay, that would be triggered. And at this point, we don't have an edge, so I'm just going to go a little bit faster and comment a little bit faster. So after the climactic action, a possible change of behavior, which suggests maybe a testing as a trading range. We might have continuation more to the downside. Again, if you're holding multiple units at this point of time, you scaled out of some, you have some profit, and you're just holding on to the rest while you're going through this consolidation. And we could see how the sell-in on this leg down compared to this one after this climactic action is actually diminishing. So this is a good sign, but is it a good sign for the continuation to the downside, or is it a good sign for the reversal? I mean, obviously, what we need to reverse is this true range bar. And the true range of this bar is quite big, right? So from the previous close to the low of that bar. So this is the level that if we want a true change of behavior, we need to see something like this. And if we can't overcome this level, then we're still going to continue to the downside. Okay, really good bar here. And I like how from the previous bar where we had a high volume signature, we're actually going up and above this high into the body of this bar, and it happens on a slightly lower volume signature, which just basically tells us that there is some kind of ease of movement. And ease of movement is always about the ability of the price to go in a direction of the trend on lower effort. And usually that lower effort suggests that the opposing force, which is supply, is diminishing. And we still could come back into the trading range, but in itself, this is a very interesting thing to happen here at this spot. Okay, coming back into the trading range. So just a range bound action at this point with some elements of the demand, but 850 is still there for us, to overcome. So at least at this point, we're still going to be thinking, what's the main bias right here? Well, we have a downward bias both on the larger structure and on the smaller structure. So unless it proves to us that it wants to change that behavior, we're still bearish. And here is another interesting bar. So it undercuts the support. And here the idea is, are we going to have some kind of spring action, or is it going to be a sign of weakness? Well, now,
why don't we stop at this point?
Okay.
We have a potential spring action.
Mhm.
This is part one of a two-part tape reading workshop. So tune in next week for part two. And if you're watching it on demand, it's should be right next to this one. So thank you, and we will see you next time.